Hello students and welcome to the lecture. So students, as we know that we are covering the financial knowledge and the banking awareness part of it, and actually we were discussing about the more facts on the banking evolution. Okay, in the previous lecture we had discussed in detail about several facts and figures related with the topic. Basically in this lecture we are going to continue with the topic and we will have a look upon the complete series of banking evolution, how the banks were evolved over the time, and how the situation what we see today in the today's world evolved. Okay, so that is the main topic we are going to cover in this lecture. This topic is somewhat of the revision, okay, and it is somewhat of the learning of new facts and figures. Okay, new facts and figures. Okay, and basically in this lecture I won't ask you have you revised the previous lecture or not, because this lecture is totally depend upon your knowledge of previous lectures. If you haven't revised the previous lecture, you won't be able to have a discussion in this lecture. Okay, that's why it is your honesty test. Have you revised the previous lecture or not? So, with this note, let's start this lecture. This is the topic we are going to cover. Okay, these are the topics which we have covered so far, right? Chit and cheat committees, this and that. Okay, now this is the main topic we are going to cover in this lecture. It stands for the establishment of modern banks. Okay, the establishment of modern banks in India occurred during the different phases of its history, primarily under British colonial rule and after gaining independence in 1947. So basically, if we talk about the ancient time, right? In the ancient time, there was only banking activities or some kind of activities which are the financial of nature, but we call them banking activities as per the today's scenario. Okay, like if we talk about the hundi system, if we talk about hundi system, then what is hundi? Hundi is basically the type of bills of exchange, right? It is just a type of bills of exchange, and basically it is the credit facility, right? Like if you have purchased something, you do not have money on that time, then you can take a time, you can make a bills receivable and bills payable, and then the seller from whom you had purchased the item will get the money. So it is a credit facility, right? It is the credit facility only, and it is a financial activity. Okay, and now we count it as a banking activities. All right. Similarly, if we talk about Adesh and Dastavej, then these were the royal orders or orders of having force for implementation. Okay, so the Adesh and Dastavej were basically released by a body which either having the royal orders and the force for the implementation of that particular order. All right, but still there was no sign of banks. Okay, or we call no sense of institution to be called as banking or financial institutions. And all the things which were happening on that time were only based on the mutual fund, or you can say mutual trust, and interaction of the community. All right, that's what we have covered so far. There was no sign of banks or any institution which we call the bank or the financial institution in a true sense. Loans, credit, you can say all the other activities were only based on the mutual trust and the interaction of the community amongst themselves. Okay, why? Because on that time we having only the barter system. Okay, which means commodity in exchange of commodity. If you have to buy something, you have to give something, and the thing should be exactly the thing seller wanted. Okay, like as we had taken example, this person want shoes and having you can say ground nuts to offer. Okay, then he is required to find a person who wants ground nuts and who is having shoes for exchange. Okay, so that he will grant him the shoes and he will grant him the ground nuts. So it is based on the mutual needs. Okay, that's why there was no particular need for the development of the any institution to be called as the bank or the financial institution. Okay, and remember I had told you a famous quote by the Albert Einstein, which means mother of all inventions is need. Okay, and basically you can say need is the mother of all inventions, right? That's what we have covered in the previous lectures, and this is the famous quote of the Albert Einstein. So now the question is, then if we didn't have any need to establish a bank or the financial institution, then how we came to that need and we had to establish this kind of institutions? So the clear answer lies with the British arrival. Okay, now you can ask me, there were total four European powers in India on that time. The first one were the Portuguese. Okay, thereafter the Dutch, thereafter the British, then the French, and even there were Danish. But they did not have any significant influence in the Indian culture in comparison with the Portuguese, Dutch, British, and French. That's why we generally not consider them as a biggest influencing power. Okay, so now you can question me, there were four European main powers operating in India. Then why only I consider the British arrival as a main cause for the development of that need? So you have to understand it. How? It lies with the Britain itself. Basically, in Britain, there was the Industrial Revolution. Okay, due to the foundation of the steam engine. Okay, there is a foundation of various machines, programs, and all the things. This increase production of Britain. Okay, and with the increasement of the production of Britain, they want to earn the profit in more quantity. All right. So if we focus on this thing only, then it means suppose your manufacturing cost is 100, your profit is 20, your total cost is 120. And if you are selling 100 units, the total money you will earning is 12,000. Out of this, 2,000 is your profit, right? So if you want to enlarge the profit, you have to do two things. First, reduce your cost of production, or second, increase your production. Okay, so there are two ways. So if we focus on the first way, like cost of production, it means that your raw material, your land rent, your machines, your manpower should be low. Okay, and if we focus on the increasement of production, then we require quantity increasement in raw material along with other factors. Okay, so when the British came to India, they only had two main aims. The first is procurement of raw materials. Why? Because there was a beam or high beam in the textile industry of the Britain. Okay, and for textile there is a requirement for cotton and indigo. These crops could not be grown in a much quantity in Britain. That's why they came to India where there is a fertile land so that they could procure a raw material at low cost. Because as we know that they had occupied the country's administration. That's why they were exporting the raw material on their own cost. Okay? Or the cost they wanted to be. Second is that to sell their finished goods. Okay? Like 100 is your production cost, or you can say your production cost has been reduced to 80 plus 20 is your profit. Total cost is 100. And if you are selling the 500 units, it means 50,000 you are earning, out of which 25,000 is your profit. Now your profit has been increased from 2,000 to 25,000. But it could be only possible if you are able to sell out these units. Okay, and if you want to sell out 500 units, you require a huge market base. And that market was India. If you learn the Indian history, you will find out that Indians were fond of the shopping. Even today, you can see your mother, sister, your brother, your father, whatever you have in your family, you can see them. Some of them will be fond to buy the things, even if they use or not. Okay, that kind of culture was also there in the ancient times or in the previous times, you can see. So when the British find it out, they found it a clear way to establish their needs in India. Okay, but now come to the topic again. Why only British? Why only British? Why not others? The simple and the clear cut reason is that others were exchanging goods in exchange of goods. Okay, means they were the part of the barter system. Okay, like the Portuguese, they were exchanging gold and silver in return of the spices. Okay, but the Britain had the monetary economy. That's why they required people to get habited with use of money instead of barter system. Okay, that's why they require to establish the banking system in a proper sense. Because in the previous lecture we had discussed that when there were no banks, how the people of India were suffering in paying the taxes, in buying the things and goods and services within the country. Okay, so that's why primarily the British colonial rule is the main part where the banks came in the true sense. Okay, and thereafter their development will continue even after the independence in the 1947. Okay, establishment of the modern banks. So now we are going to take an overview of the modern banks. These banks we have already covered in previous lectures. Okay, but now we are going to revise them again and again. And now I am going to test you, have you revised your lecture or not? Okay, so let's start. The first is the Bank of Bengal, Bank of Bombay, and Bank of Madras. So when the British established the monetary economy, okay, and you know what was the main need of British to spend the monetary economy? Is the question I'm asking you. Okay, so let's discuss it in depth. So, students, it's my humble request to you. I'm just not only wanting to tell you everything, okay, because you can get it from somewhere, anywhere you can get it. My main aim is that you should be able to connect the things in a proper manner, okay, like what were the things actually happened. That's why the things we have today. If you are not able to grasp these things, you might pass the paper. Exam you can pass. I can guarantee you, you can pass the exam. But you won't be able to reach the heights in your career. That's a bitter truth which I'm telling you right now in this video. Okay? You won't be able to reach the heights if you're not able to learn the things and connect them together to grasp the clear cut picture. Okay? So now come back to the topic. Monetary economy. Okay? Before this, actually, when the Britishers came to India, they established their market. Okay? Like export raw materials, okay, import finished goods. That was their aim. That's why they came to India, right? But this thing required finance. You can ask me why. Why the finance is required? Like, they had the administration of the country on that time. Why they were required the finance? To finance their own services. They could do whatever they want. No, because most of the ships used to export and import goods between India and England, or UK, you can say United Kingdom, were of private origin. All right. So the ships which were using by the Britishers to export and import the goods between India and UK were of the private origin. Okay. Their crew were on private payroll. Okay, like the private players of the Britain were paying them to do the services on their ships. It means that if you want them to export and import your goods and services, they will charge a fee. That's why the British required a finance. Okay, so when they came to India, listen, they were, you can say, they were much optimistic in their approach. Okay, they used Indian revenue to finance their Indian trade with United Kingdom. The money which they were collected from the Indians, called as the Indian revenue, they were utilizing that money to finance their export and import between the UK and the India. Okay, and this money is basically collected from tolls, second from taxes. These were the two main areas from where they collect the tax. So sorry, collect the money. Taxes were having the huge share in revenue collection. Okay, if you remember, I had told you prior to the Britishers, there was a system that the king or the state received or accepted the tax in form of partial share of production. Okay, they generally do not require a money to be paid as a tax, but they could accept the production of the farmer or the artisan or whatever he is as the payment of the taxes, right? But British want monetary system. They were not willing to accept the tax in form of the physical production. They want money of it. Okay, that's why when they take over the Bengal was the first state, like, which they take over. Then they introduce the permanent settlement. Okay, the permanent settlement is basically known as the revenue method. What was that method? In that method, basically, there was a cycle or pyramid, you can say. The top is the British government, thereafter is the zamindar, and thereafter is the farmers. Okay, so in this method, basically, the British followed the same approach of the previous rulers. They gave their attention to the zamindars. Zamindars were basically the powerful landlords who had the land of nearly about 400 villages and more. Okay, zamindars were responsible to collect the taxes from the farmers of his villages. Like suppose if the zamindar had 400 villages under him, 400 villages under him. Okay, then he is responsible to collect taxes from these villages. Okay, and then whatever tax he has collect, he had to submit 89% to the government, 11% to the or to himself, you can say. Okay, that was the deal under the zamindari system or permanent settlement, you can say. 89% of the revenue will be gone to the government and remaining 11% will be to the zamindar, which means suppose if total collection was rupees 1 lakh. Okay, so 89,000 will be the part of the government and the 11,000 will be kept by whom? Who will keep the 11,000? Zamindar will get it. Okay, that was a easy deal. Okay, not. There were so many factors why the permanent settlement failed. Actually, it was failed. Okay, but the main reason is monetary approach of British government. Okay, not only the taxes were high, but also payment in money made it difficult to pay rent or taxes. Okay, even the tax rate was high, and or you can say the tax payment in money made it difficult for the farmers to pay the money to the zamindar. Which means if the farmer is not able to pay the zamindar will not able to pay the government. Okay, and this system was failed. Basically, the government declared zamindar as a person who is to be blamed for this failure. All right, then the British started the new system known as the Ryotwadi system. Okay, this system was basically focused in the areas of Maharashtra, Madhya Pradesh, okay, Madras, and other southern regions. Now, in this settlement, basically, this is the British government, okay, and then the farmers. What did you notice? They eliminated the zamindars from the system. They said, we do not require a zamindar. We will collect the tax by ourselves. That was their plan. Okay. And even tax rate was not fixed. Like in the previous, we had noticed the tax was fixed as 9th by 10th. Okay. But in the Ryotwadi, the tax rate was not fixed. And basically, it is based on the periodical survey of land. Like after every month, 3 months, 6 months, 1 year, 2 year, 3 year, okay, whatever is the time period decided, the government officers will come to your farm, will analyze the soil fertility, and then will declare a soil as per the taxes. Okay, like if we declare the soil is good, so your tax rate will be somewhat of, you can say, 5 by 10. Okay, if we declare no, your soil is not good, so 2 by 10. So basically the tax rate is decided as per the basis of the soil fertility, okay, after the survey. But that was not enough, because tax rates were even high, because the Britishers required money to finance their trade. Okay, and the second reason is money payment of taxes. Okay, still the farmers are required to pay the tax in the money. Okay, and that's why they have to lend the money from money lenders on predatory loan basis. Okay, and about predatory loans we had discussed already in the previous lecture, so I'm not focusing on this type right now, but I hope that we revised, so now you can understand what you mean by the predatory loans. Okay, and that's why most of the farmers became incompetent, they became insolvent, their lands were seized by the money lenders, and many, you can say, inhuman activities were done to them. That's why there was a huge protest by farmers against the Ryotwadi, and eventually Ryotwadi failed. Okay, now the Britishers see their two systems have failed: permanent settlement and the Ryotwadi. Thereafter, third system they introduced were known as the Mehelwadi. This system was basically introduced in the northern India, like the belt of Punjab, Haryana, UP, and this and that. Okay, in Ryotwadi, basically, sorry, in Mehelwadi, basically villages were categorized as mahals. Okay, or you can say a large area. All right. Thereafter, again, the zamindars were put in the picture. Not only because they had a good relations with the village people so that they could collect the taxes effectively, but another reason was that the expenses in order to collect the tax. When the zamindar is collecting the tax, he is collecting the tax on its own expenses. But when the British government were collecting the tax, they were expending their money. That's why they put the zamindars back in the picture. And now the pyramid was like that: the government, the zamindars, the village headman, and then the farmers. Okay. In this system, basically, there is a collective tax. Okay. Like in the previous section, in the previous, you can say, the areas, individual farmers were responsible to pay the taxes as per the tax law. In Mahalwadi, entire village will have to pay a certain tax. Like there is a village A, B, C, D. Entire village is required to pay 5 lakhs, 7 lakh, 8 lakh. That's how. On the village basis, the tax rates were decided. Okay. Thereafter, the village headman will collect the tax from the farmers, submit it to the zamindars, and the zamindars will submit to the government. System was good and improved, but again failed due to the monetary approach. On that time, the money was not in the circulation. That's why the farmers who were paying the taxes had to move to the money lenders, and then predatory loans we had discussed what were the issues with them. This not only prove the need to increase money supply in in the economy, but also generated need to establish institutions to finance trading activities. Because after all these experiments like the permanent Ryotwadi Mehelwadi, the British came to know that the monetary supply should be increased and the credit needs and the financial needs for the traders should be entertained in the market because they were expanding the more and earning the less. That's how the banks were came to the picture. Okay, these were the established by the British India Company and were the prosecutor of the Imperial Bank of India. Later became the State Bank of India after the 95 Act. Okay. So, students, basically in this lecture, we have discussed this kind of topics. Okay. In the next lecture, we will continue with the same topic and we will have a discussion over some other facts and figures. We will revise them. We will try to connect them with the scenarios. Till then, I would like to request you kindly revise the facts and figures I have told you because these are very essential if you are really trying to connect the things together. With this note, let's end this lecture and thank you.